Mark, and today I'm going to be talking about tips on keeping your cash flowing. Just going to change screens. Right. So here's the thing. Businesses, they do not fail. They just run out of money. So the simple solution is not to leave yourself cash poor, which is when all your money is tied up. I'll give you an example. I nearly ran out of cash or cash flow just as the pandemic was starting, which I believe was in March 2020. It was at the very early stages of the pandemic, and I just cleared all of my large invoices from the Christmas period, and I was also running the stock down by having a sale. But all of a sudden, the seriousness of the pandemic took hold, and the realization was that I was having to close the doors, and it left me completely depleted with my cash flow to the point when it was actually getting quite serious. And in a way, I was almost relieved to shut the doors just to take stock and just try and work things out, which I managed to do afterwards. So keeping your cash flowing is so pivotal in a business. Is cash no longer king? It's cash flow and the management of your cash flow, and a key to that is timing. Is your money going out faster than it's coming in? And is the money coming in from the customers, or is it propped up borrowed money? Because if it is, you need to change that and change it quickly as well. Is the money coming in inconsistent? And if it is, consider looking at ways of improving that consistency. Maybe it could be something as simple as the way you invoice. Do you wait till month end and then send your invoices out? And are you bankrolling your clients as they're allowed to exceed the agreed terms? If so, it needs addressing, and sooner rather than later, as it's important that you avoid unnecessary time playing credit control on the phone. Here's an example of the consistency of that as a scenario. Whilst in construction, we changed from manual invoicing to taking on an accounting system, which happened to be Sage at the time. And it allowed us to email our invoices as soon as they were raised. Now that sounds like a simple thing these days, but back then, which I believe was probably about 2006, the savings that we made just in postage stamps alone allowed us to rent a high quality coffee machine and be completely paid for just from the postage stamp saving. So, you know, there's something there to be taken out of that. Unexpected debits that drain your account. It happens to the best of us. You think you're ahead of the game, and then an unaccounted charge hits your account, or you've missed a tax bill and it's now due. Possible solutions could be to have a financial safety net. I've got another example of that, of an unexpected bill. Whilst in retail, a supplier that I had and I've been working with for a number of years, they made the mistake with a payment plan that I had to the tune of nearly £1,500. I brought it to their attention, and the simple result was it made quite a dent in my cash flow at the time, because I had to counter that because of the mistake that was made on invoicing. So maybe always have a safety net if you can do that, or you can manage to do that. Suppliers. Could you consider looking at more favourable terms with your suppliers? If you have performed well, could there be a possible cashback scenario? I'm going to give you an example of that in a minute. Or simply, if you're struggling to keep your payments up to date, make sure you regularly communicate with your suppliers in the hope that they will continue to work with you. Now, the example I have is a friend of mine. He used to run a very successful restaurant out in Spain. And one of the things he realised that he was spending a small fortune with a meat supplier. Um, and what he did was he renegotiated to get a cashback annually in the region of 15%, and that was based on a target that he was given, which I have to say he achieved every year. And what he chose to do with that, as a great example, was he gave that 15% cashback return from the supplier to his staff, which was a substantial amount of money, and he gave it to them as a bonus. And what it allowed him to do was it allowed him to head off with his family to Africa for the winter. So, it's just amazing how you can look at scenarios like that can make a huge impact for your cash flow and for your business as well. Advance payments. Could you consider taking full payment or a deposit for goods that have not arrived yet? Now, again, I have an example of that, and that was in retail. One of the things I always insisted on was, when dealing with wedding parties, I would always take full payment in advance. I would always use the excuse that the chances are we're going to have to do some tailoring in amongst all of these suits. But regardless of the customer, I always took full payment in advance. Could you speed up the cycle of when invoices can be paid? Is your accounting system working well, or are there areas you could improve? An example of that, in construction, one of our suppliers would always offer a 2.5% early settlement offer based on agreed payment terms. And the long and the short of it is we always paid on time and took that 2.5%. Here's a question: are all your eggs in one basket, serving one client? If so, it might be an idea to not rely on one account, but look further afield for new opportunities. In construction, we always made sure that we spread ourselves with all of our invoices to all clients. We felt that if you kept all your eggs in one basket, and the risk was that they either went under or they changed direction and didn't want to deal with you anymore, it would have a huge impact on your business. And I believe the most we ever had with one client was about 15% of our invoices across a month or across a year. So it's important that you keep that tight. And also what it did was it gave us a focus to make sure we were always looking for new customers. Scope creep. It's unavoidable, I'm afraid, but manageable by enforcing the necessary boundaries and working within those parameters. Some people have a habit of expecting more, but within the original budget, while circumstances can also dictate that change. Your job is to project manage that without losing out and without your client losing face. Cut the fat. Are you overspending in areas of your business? Are your expenses in order or a little excessive? Could you trim your stock levels by adding a special offer or possibly swapping stock with a network contact? Is your stock mix out of balance? Is it worth checking your overheads to see if there are any potential cost-cutting exercises? Are you overcommitted with forward orders? Are your staff expenses in line with your budget? These are all valid questions and one that can help you make financial wise choices. Another thing to consider: do you have a responsible line of credit available when called upon? If not, it might be worth considering to have it as a safety net. And finally, keep taking action by keeping a constant eye on these key management systems and tweaking them where necessary, will go some way to maintaining a healthy bank balance. And I wish you all the very best with that. Thank you.